Hey everyone, welcome to day 3, session number 1 with Sean Dekmar. Sean is the founder of Dekmar Trades, a full-service trading education site complete with chat rooms, one-on-one mentorship, and even a live trading simulator to practice on. He's here to talk about how to get started, what patterns he likes to watch for, and pitfalls for new traders. So if you're interested in penny stocks or day trading, this is the session for you. Hey Sean, how's it going?
Good. Thank you for having me tonight.
Hey, thanks for being on. I'm pretty excited. I've been following you since you kind of first started your service and Gmail, Twitter, all of that. So it's been fun watching how both your business and trading's been progressing. Um,
Thank you.
so just to kind of get started, why don't you tell us a little bit about your background? How did you get started? Where did you come from, and kind of build up to where you're at now?
Yeah. Both my parents are teachers, so I wasn't really anywhere to have the background, financial type of mentality. But as I got older, I started going through high school. I realized I didn't really want to live the 9 to 5 job. I kind of wanted a little bit more than that. So basically, kind of just like any random high school kid, basically typed in on Google ways to get rich. Like that was going to help me in any type of way. But I did that, and 3 things popped up when I did that, and that was either start a business, get involved in real estate, or start day trading. And I really never knew what day trading really was, so I started looking into that more and more. And the more and more I started looking into that, I really kind of got really interested. And from there, it basically just became part of my life, really trying to learn about day trading and take it to the next level any way I could. Then going into college, I kind of made day trading a separate priority to me, doing all my classes, then go to day trading, kind of the library after that, and kind of doing my own little class to myself because that was important to me, and always trying to improve my day trading. But that's probably how I first started off, just got really involved back in high school. And then after that, kind of took it over to college, and where I got a lot more serious, and that's where I started day trading.
Okay. So now you've actually got two of the 3 checked off, the trading and a business.
Yeah, yeah. Real estate will come eventually, I guess.
How did you actually do any trading when you were in high school?
High school, no. High school is where I started finding it, and then college is where I started opening an account, and that's when I started doing my first couple trades. I read some stories about some kids that would trade out of their dorms. They would make a good amount of money as well, thousands of dollars, and thought, why couldn't I do this? So I got really involved with it, and started reading some books, started watching some video lessons, and ever since then, I just became the trader I am today, which I am proud to be of.
Cool. So I'm actually really curious in there. Did you start doing paper trading, or did you just jump right in?
Oh no, paper trading for
Okay.
sure. I highly suggest doing paper trading for any trader. Jumping right into the market, especially the type of market we've been seeing today, is you're gonna get. I don't want to be mean, but you're gonna get demolished most likely. It's very important to paper trade, and everyone who joins my chat room or people email me and they ask, "Oh, my first trade's coming up." I always ask them, "Have you been paper trading?" Because I don't want to see anyone get squashed or demolished right away. You have to kind of put your how would I say this? You kind of want to just get used to the market or get used to the feel of the market. I use this example a lot to a lot of students is you wouldn't go take your driving license test without, sitting behind the wheel a couple times and trying to, get a feel behind the wheel. Same thing with day trading. You definitely want to paper trade a little bit, kind of understand how the market moves, and it gives you a great understanding on also buy and exit points. So that's really important as well.
Okay. Um, what about, I guess, kind of the emotions along with that? A lot of people will kind of argue against paper trading and say, no, it doesn't really work because you don't have the emotional weight of the money on the line. um,
Yeah, I understand that where they're coming from. I still paper trading. I'll get fired up for. You might make a couple $1,000s over a paper trade. I'm up and down screaming, saying I just made a couple thousand. Just kind of thinking, if I do carry this over into real money, that's when I'm going to be a great trader. You could say it's not emotion-wise, but nothing is really going to prepare you until you actually hop in on that first trade for emotions, and that's when kind of everything takes over. And paper trading is going to help you overall, though, still as a trader before you hop in as a real-time trader.
Okay, so it's kind of like the academic side, and then
Yeah,
actually trading is the that's where you get the experience side.
exactly, exactly. You always just have to be ready for anything, and when you do hop in, a lot of those paper trading days are gonna fly right out the window, but you're gonna have that background instinct that you kind of need to it.
Nice. Yeah, I mean that totally makes sense. I always like asking people that because it's kind of such a divided topic as to which side of the line people are on. So I'm always curious to know what other
Yeah.
people think. Um, so when you first jumped in, how was your record right away? Were you one of those people that like you
Oh
got some like awesome win and then you're like, yeah, this is cool, and then like kind of tapered off, or how did it go from
no,
there?
go
No.
back complete opposite. Don't right away. First trade I got into. We actually, I was super excited. Kind of just, my account was ready the very first day, so I was like, oh, I'm trading right here. Didn't care what the market looked like, didn't care what setups I was seeing at all. I was saying, oh, I'm getting in some type of stock today. I've been waiting, 2 years to finally trade. I'm getting into something. So I hopped in. I forget what the exact ticker was. But it was one of the top gainers of the day. I'm saying this stock's a top gainer, might as well hop in. Hopped in, and the moment I hopped in, I woke up the next day because I held overnight. Woke up the next day, I was down almost $200, $300, and I was very depressed right away. Just saying like, why did I do this? Or should have took my time a little more. And that was right when I first started off. So no, it took me a little bit to kind of take a step back and realize that I kind of have to really take my time with this if I really do want to grow a small account.
Hmm. What I'm curious, how did you, I guess, deal with like that loss right away? A lot of people have been like, man, this sucks. Screw this. I'm gonna go do something
Yeah,
else.
yeah, yeah. I mean, what you have to understand is losing is part of day trading, and if you don't know how to take a loss, you're not going to be a great day trader. It's part of the game, and a lot of people do that. They say, "Oh wow, this sucks. I just lost $200. I'm kind of over this," and you kind of just have to understand that you're gonna lose. No one has a perfect track record of never losing a trade. And if you do have that, I mean, you're not real. Like that doesn't happen. Everyone's gonna take a loss eventually in time, and it's how you handle it. A big part of taking losses is that you cut them very short. You don't want to take a big loss, and that's a huge part that I've learned about my trading strategy is you don't want to take a loss. If something doesn't go your way, you got to cut that quick. And holding overnight, waking up the first day, I wasn't even sure how to sell using my brand new broker and everything. So I was just happy to get out of the trade, honestly, before I just lost everything. So I always try to look for the positives in things. And then the positive of that is, hey, I learned a lesson. Every loss comes with a lesson learned. So you just always have to kind of think, oh, that's not a way I should trade it anymore. When you get enough losses, you kind of realize, hey, there's only so many ways I can lose. It's only up from here.
Sure, and that was actually kind of what I was gonna say next was how do you deal with it, but that just kind of positivity, and that
Yeah,
probably
just
matters more than anything else.
yeah, you just have to be a positive trader and understand that trading is part of losing is part of trading. So that's just something you have to get used to, and it's all about just cutting losses early and really kind of just building from there.
Hmm. So what was probably, I guess, like one of your biggest failures, and what did you learn from it?
Probably my biggest failure. If I had to think about that, well, probably one of my biggest losses was around the grand, and probably my biggest failure was just being a bag holder, just holding a stock way too long, just thinking, oh, the stock is going to come back and bounce from this moment, and just kept going down and going down, and just I just wouldn't sell it because I had so much just hope, and I was like, oh, I'm down, $300, $400 right now. Let me just hold this. It has to bounce eventually. Went down, down $600 and $650. It has to bounce eventually. Just never came back for that bounce, and then I was just really disappointed with myself just because I never cut losses. And cutting losses is a huge part of my strategy. It's a huge thing I tell traders every day, that if something's not going your way, look for the next support line. And if that next support line doesn't hold, you have to get out and just kind of face loss. Every day is different in the market. So you're always going to have a brand new opportunity. And it's a lot better than kind of just sitting on a dead stock and just having your account get destroyed for nothing.
Sure. So just kind of knowing that you kind of broke your own rules, and that was really
Yeah.
the hardest part for you.
Yeah, you have to go into every single trade with a plan, and that's kind of what I've been telling a lot of my students or a lot of the traders in our chat room is every trade you have to go in with a plan. Either if that's knowing your support, resistance lines, knowing where to cut losses, and knowing where to take maybe half your profits, and knowing where to move your stop loss. So if a trade doesn't go your way, you know what you're going to do. If a trade does go your way, you know what to do. So you really just have to every scenario you have to have a plan for it. And the worst thing you can do is just hop in a trade like I did on my first one, just wanting to trade, hop in and just hope it works out for the best.
And let me guess, like the next day after you got out, it finally came back.
It bounced eventually, but we don't got to bring that part up.
I've had more than a few of those trades myself. It's
it happens.
there's some kind of like a meme chart that I remember seeing once that it was like what was going through a trader's head as a chart is like going up and down.
Yeah.
And it's always that it can't go much lower, it can't go much lower, it can't go much lower, and then fine, I'll sell, and then it finally bounces. And
Yeah, and that happens a lot of times. Either it's going down, you want to short it. Seems like the moment you get in, it turns around. You see a spike happen. The moment you get in, it turns around. And you kind of just have to realize you can't chase these stocks, especially these little penny stocks or penny stock, anything under $10. They move a lot, and so hopping in and chasing spikes and chasing shorts isn't your best strategy. It's just something you really just have to look out for. And again, it's all about planning out your trades.
so when would you, I guess, kind of know whether you should stick to your guns in a trade that's going against you versus when you need to just call it?
I mean, a lot of it comes down to instinct of being a trader also. There is, you got to know your fundamentals, and that fundamentals is a huge part of trading. You have to know a chart, know what it looks like, and at the other side, you kind of have to know the hype, and you kind of have to understand what everyone else is trading, because a lot of these penny stocks, they're manipulated. They're built off hype, or built off rumors, and if you can put those two things together and really understand what's going on, a lot of traders could be saying, "Oh, this isn't going to happen. This isn't going to work your way." But if you stick to your guns a lot of time and you become a confident trader, you're going to win a lot more than you lose. And confidence is one of the biggest things any trader can have. If you go into a trade, a really fast moving stock, your hands are shaking, you really have no idea what's going on, you're going to end up losing. But if you go in as a confident trader, stick to your guns, stick to your plan, 8 out of 10 times, 9 out of 10 times, you're going to come out as a positive winner for the day.
Okay, and I suppose I probably should have started off a little bit earlier with what kind of is your bias that you like charts that or patterns that you like looking for, and obviously you said that you're primarily in pennies.
Yeah, so basically, I'm probably more biased towards the long side of stocks just because there's more easier chart setups, and that's kind of what I've been taught and trained to look for, going long, looking for easy breakouts and knowing when these breakouts will occur, stocks that are coming up to the resistance line and buying volume coming up and really just pushing these stocks through. But at the same time, you kind of have to understand that going long is only one side of the market, and you kind of have to know how to short a stock as well, especially with 2016, about how much we've seen this market drop and how many red days we have been having. You just have to know you can't just be long on a stock. You have to know how to short a stock as well. And shorting stocks is really not that hard. Also, there's some dead giveaways for shorting stocks, such as these huge pre-market gap ups we've been seeing. Any stock that's maybe over 30% on a gap up, 8 out of 10 times now in today's market of 2016, especially with these penny stocks, they're dropping throughout the whole entire day. So finding these stocks to short really isn't too hard, and it's just kind of knowing which way to go on whatever the market kind of throws at you. But I'm probably more type of, I like to go long on stocks, just because when I do find those chart patterns that I like to see, it's just a very easy, exciting way to profit. And when I do see these nice chart setups I like to see, I get very excited just knowing I know what's going to happen in the market with this stock, and I love alerting it to our traders and seeing them profit as well.
Cool. Yeah. So that was actually one thing I was curious about is what kind of advice are you telling people for how to adapt to crazy market conditions like this that are Yeah, like I would almost say unpredictable, but I'm sure a lot of people would say no way, it's totally predictable.
Yeah, I mean that's how the market is. No one is 100% know what's going to happen. If everyone kind of knew what's going to happen, then everyone would be millionaires. But that's kind of the fun of it. You really you have an idea. You can go to your indicators, kind of see what's happening. You kind of use your instincts, whatever you've learned over time, to kind of give you the best judgment about what's going on. But at the same time, the market could throw anything your way, and that's you kind of have to be ready for it. So to adapt to this market it's really tough. But I mean, over time, we've been seeing a bearish market, so we know that you kind of have to just get ready for it every single day. And the best thing to do sometimes is sit back. If you don't see something that you don't like, that you just don't trade. And that's probably one of the biggest wrongs that a lot of beginner traders get into. Something that I did. I got my account ready. I want to trade. I want to make money. Let's become a millionaire. Like, let's do it. It doesn't always work like that. You kind of have to sit back and wait for your trade. Find your strategy, find your plan, wait for these chart ups to set themselves up, and you just to make some an easy profit that way. You can't just kind of hop into a stock and not have any plan, or especially when the market's not really giving you the type of conditions you want.
Sure. So I was curious. You mentioned a couple times trading your plan. How do you go about creating that plan in the first place? Like what? Like are there certain press releases that you're looking for, or like what kinds of things do you look for to create those plans?
Yeah, that's definitely part of it for sure. I mean, for my personal kind of trading strategy, I love the hype. I love finding what everyone is talking about, especially for these little tiny stocks. That is what moves most of these stocks is the upcoming news, the hype towards it. So when I come to finding, a plan to find these stocks, I try to find what came out with the newest news. What's the hottest news of the day? Once I find the hottest news of the day, it usually comes down to about 5 or 4 stocks every morning. And from there, I kind of do my own little what's support, what's resistance, what have these past chart setups look like. And from there, I can finally, kind of go into more depth about what is the day going to open. And out of those 4 or 5 stocks, once the market does open, probably about 1 or 2 of them is only going to follow the plan I like. So it's kind of starting off with a little broader range and narrowing it down throughout from pre-market to the time it opens. So you really only have 1 or 2 stocks to really watch. And then one of them most likely will follow your plan, either coming up to a resistance line, and that's when it breaks that resistance line. That's when you know to buy. But it's really kind of just understanding what has the press releases, what has the hype, what is everyone going to be playing today, and you kind of want to follow the majority about what everyone else is going to be playing, because volume equals activity and activity equals profit. So you want to find these stocks with very high volume. I like playing stocks with volume over 2 times, 3 times its average volume. And that's another huge problem. I always tell my traders in chat that volume equals activity and activity equals profit. They're probably tired of me saying it, but I just want to get it through their heads. That is what will make you a profitable trader. You can't hop into a trade that only has 20,000 shares traded in volume. It won't be profitable, and it becomes very unpredictable. But if you get into a trade that has let's say 10 million in volume and the average is 900,000, that's a hot stock today. A lot of people are going to be playing that. So that makes it very profitable and a very great hot stock to play. But it'll be good to find that stock before that huge volume comes in. And by finding that is by finding the press release right when it comes out, seeing if the stock is good on the RSI, which would be trying to find a stock kind of near the oversold side, or just trying to find a stock coming up to a nice breakout resistance level. And you really just want to find right when that stock breaks over its resistance level. It's a great entry. As you know, buying volume will probably come in right when it breaks out, and then you just kind of sit back and watch your master plan unfold.
So speaking of those resistance levels, before we did this interview, I sent you over a particular chart. For the viewers, it doesn't matter what chart is. It could be any of a million different ones.
Yeah.
And there's like 6 different support and resistance lines in a pretty close proximity to one another. How do you have any idea when you're trying to start to map this out, which ones are the ones that matter and which are just kind of arbitrary?
Yeah, well, a huge thing I go off of is, and I tell a lot of traders in chat, is about natural resistance lines. And what I mean by natural resistance lines are a dollar 50, $2, 2.50, $3, etc. These are main resistance lines. Chart pattern or not, these certain numbers are going to hold up stocks, and they're going to be psychologically hard for the stock to move on from going to, let's say, 298 to breaking into $3. So these are easy resistance lines to always remember. And usually when we get a break of 150, $2, 250, these are when the stocks are going to run up another 25 cents or another whenever how much buying volume comes in, it could spike all the way up another $1.50. But you always have to kind of be ready for these resistance lines around a dollar, $1.50, $2, 2.50, so on. And once they do come up to these resistance lines, that's when they start consolidating, start getting little pullbacks. So that's kind of an easy way to see when resistance is coming. And that's an easy kind of mentality to stick to. Stick with the whole numbers or the natural resistance lines. These are psychologically hard to get over. But at the same time, you have to look at past chart patterns. And I think that one picture was just from past chart patterns, and it did get a little wild in there. But natural resistance lines are probably the way to go for a lot of these traders. But at the same time, you have to look at the past chart. And at the same time, you can't put a million different resistance lines, because that's not going to help you as a trader at all. To start the day, I always look at the natural resistance lines and what is the main ones in the past. And then from there on, I kind of look at what's happening throughout the day. By 10 o'clock or 11 o'clock, it kind of forms its own support and resistance lines, and you kind of go off from there.
Okay, so it's kind of an evolving process as you're
Yeah,
going.
yeah. And as a trader, you kind of develop that sense about what's going on over time. So the more you do it, the easier it is to see. So support and resistance lines are, the building blocks of, and understanding them are the building blocks of becoming a great trader. And just looking at a chart real quick, any trader that has been trading for a while can kind of just point them out within seconds. It's not really that hard, and the more you trade, the more you're around this trading community, you can definitely spot them out real quickly.
Mm-hmm. Okay, so that's kind of the next step in the process here. We had the look for news, look for where other people are going, look for the volume, and then look for support and resistance lines, kind of your basic charting level. What would be next when you're kind of making this plan?
So we got press releases. I'm going over this with you.
Yeah.
We got press releases, which is hype, bringing in hype. You want to, find what's hot in the morning. We look on message boards and finding what's the hype about every single morning. We have support and resistance. We have volume. And then it's basically just putting all these together. And again, every single morning, there's going to be about 4 or 5 stocks that have the hype, that have the press release, that look like they're going to, really pop off. But again, it's going into kind of more deeper of looking at charts from there, seeing what's more on the oversold side, what's more on the overbought side, what stocks chart patterns or their possibilities of breaking out. And that's kind of more of a technical analysis thing that more experienced traders can kind of spot out. But probably volume and hype are the main things that are really going to move these little stocks that I look for personally as a trader.
Okay, so that can be the first strategy that you would recommend to people when they're starting to look into it.
Yeah, I mean, there's a lot of strategies. There could just, dip buying is a simple strategy for traders. Just trying to find these oversold stocks. Buying at a low, selling at a high. That's a very simple thing to do. But I mean, that's more as a slower thing to do also. And me, I like just kind of being a little more risky and making a lot more, but at the same time, I could lose a lot more as well. But it's all about coming down to being a confident trader and having a plan, which we talked about.
Sure. So, kind of the flip side of that, what are some of the more common issues that you see people when they're first starting out that you wish that they would address a little bit more?
Yeah, probably the most common issues are probably 2 things. So one, what we talked about already, which is volume. I've had people message me saying, "Hey, I got into this stock. What is it going to do?" And at the same time, people say, what is the stock going to do? I can't answer that 100% like completely. If I knew, I'd be right there with you, just going the right way on it. But I see a lot of traders hop in stocks and it'll have 40,000 in volume, and its average volume is up near 300,000. That's a dead stock. It's not going to do anything. It has no movement to it. No one's really pushing the stock. You really have to look for stocks that have good volume. So whenever a trader gets into a stock with a low volume, I'm just like, oh, I really wish you didn't do that. And then the other thing, which is understandable, that a lot of traders don't know yet, is entry and exit points, which comes with time. That one's really hard to kind of get adjusted to, as traders say, oh, I got into this point, and right when I got in, it went up a little bit and went down. I just don't know when to get in at all, or they just don't know when to take profits. That's another huge thing. They don't know when to take profits. They'll be up 25 cents or so, could have a great amount in their account, maybe up $100. And starting off, you have to really be able to take profits. Being greedy in trading stocks is going to be the death of you. So you really have to know when to take profits, or at least take half your profits, and maybe let the other little half kind of just hopefully go your way. But I mean, you always have to be taking profits, and you have to be cutting losses early, because I've seen so many traders get in, they're up a good amount of money, and then it starts fading slowly, and then they're down $100 in the opposite direction, and they don't know what happened. And you just cannot be greedy. And that's one of the hardest things about trading stocks is you hear about huge stories. I know traders who have made $100,000 a trade, and that would be awesome to do. But I mean, it's just that's rare. You can't hold hoping that's going to be the next big breakout. And we've seen some huge breakouts. Some penny stocks going from around $2.50 running up to $20 overnight. So you have 1,000 shares, you're making 18 grand overnight, which is absolutely huge. But at the same time, I mean, the odds of that happening, in your trade aren't very high. So you just always have to be a smart trader about it.
Okay. So let's see. We went through, actually, on that same note, are finding those entry and exit points, is that just a matter of experience, or is that something that you can actually practice for and try and learn?
No, you can definitely practice for probably the best time to get into entry and exit points is the break of these resistance signs. We see a stock testing $6 over and over and over again. When it does finally break, let's say $6, for example, if it's tested a couple times in the past, it hasn't broken through. When it does break the $6 mark, that this is showing the signs that the stock is, it's building strength. Everyone's going to be excited the stock finally broke through, and that's when buying volume comes in, and the stock will usually spike from there. So it's the break of resistance is our great entries, and then coming up to the next, let's say, natural resistance line is a great place to sell. So break of $6, great entry. Spikes up to $6.50, great exit right there.
Okay. So that makes a lot of sense, and it goes hand in hand with what we were talking about just the natural resistance and support lines, and kind of a nice flow through there.
Yeah, you got to keep it simple.
I like it. Simple is easy. I like simple. So as somebody's kind of progressing and they start to start getting a little bit of momentum, a little bit of success. How do you adapt as you start getting a larger account? There's a whole new set of risks and challenges that come along with that.
Yeah, probably the hardest thing about growing an account, and once you do have that big account, is adjusting your shares, your share whole position towards a stock. Because before you might say you only have 1,000 shares starting off, and every penny would be $10 either made or lost. But when you start putting more shares, let's say put 10,000 shares on a stock, each penny lost or gained is $100. So you're kind of just absolutely just hopping into another bigger either way to win or a bigger way to lose, and that kind of is either going to break your confidence or you're going to be more nervous going into trades. And what we talked about before, the whole thing is about being a confident trader. So you kind of have to ease your way up into buying more shares as you go. And that kind of when you grow a small account, that's kind of the way it works. You're going to ease your way up. But other than that, I mean, it kind of just comes with trading. Starting off, you start off small, and you consistently have to win. Like being a consistent trader is key to building a small account. You can't always go for the home run hit. You have to hit little tiny hits, get on base every single day. Eventually, those home run hits are going to come, but you have to kind of just stay as a consistent trader, build that account up, and over time, that's going to hit, and you're going to like do big and just going to celebrate.
Be the Ichiro of trading, so to speak.
Yeah, exactly.
Showing my colors as a Seattleite up here.
Mm-hmm.
But yeah, I mean, yeah, you're like that's exactly it. You can go big and you might win big, but you also might lose big and then you're totally out. Or yeah, just keep going for the consistent little ones, and even if you lose, then you still lose little.
Yeah, I mean, and those big ones are come. We always have to have your stop losses or you cut losses early. If a stock doesn't ever turn around, let those profits run out. So you're gonna hit big ones when you go for consistent little ones. And that's basically how it's going to work over time. You're going to cut losses when it doesn't work your way, but when it is going your way, just let it keep going your way. There's no need to sell when something's going your way. Let it run out as much as it can before it starts pulling back a little bit, and that's when you're happy. You can't be greedy, and you have to take your profits when you have them, of course, but taking little gains over time, it's eventually going to build your account, and those little gains, within those little gains, you're going to have a couple big ones as well.
Okay. So one thing I thought of while we were talking about this, it's kind of going back a little bit to when we were talking about the planning stage. How do you cut through all the noise? There is so much noise out there of, ooh, this business did something and that one is getting this contract, and then you have 15 different people telling you about all these things too. And
at the same time, you say cut through the noise. It's kind of good to kind of embrace the noise, especially for these little stocks. We said we want to kind of hear the hype, but at the same time there are so much hype. You hop on a message board talking about stocks. There's a million people who are just saying, oh, the stock's gonna explode any day now, just because they're in the stock at the moment. So they're basically just talking out their ass, basically just saying anything they can to basically pump these stocks up. But you really kind of just have to learn over time what is good news and what is a good press release. There's so many different types of press releases that come out, and I kind of broke it down into certain keywords that you kind of look for when reading these press releases, looking, let's say, for phase 3 trials, FDA approvals, partnerships. These are all press releases and good hype news that is going to bring a lot of volume and bring a lot of attention to these stocks. And there's a lot of press releases and a lot of things that people are going to say that you really just cannot listen to just because they're probably in the stock and they're just trying to pump it up, trying to make a quick profit off you. But you really just kind of have to stick to your guns and stay what you really know.
Okay. What are some of those message boards that you like?
Probably my go-to is StockTwits. StockTwits is a really big one. But StockTwits, again, it's just people basically just saying whatever they want. You can have 100 people and probably only 5 of them really know what they're talking about. But it's always kind of fun to see a stock really rip and going on StockTwits and just seeing what people are saying, what caused the hype, or there's always those people that lost big and they're just really angry. So it's always funny to see what they're saying as well. Probably StockTwits probably my go-to, but there's so many different message boards you can go check out. You just have to type in any stock message board on Google. You'll get anything basically.
Yeah, today was Tesla's earning day, and I was on there this morning just looking at everyone's comments because they're just hilarious. It's 15 different people who are just either pissed off or in love with the company, and then like one person who's actually talking about what's happening.
Yeah, exactly. And that was another huge mistake is first starting off trusting a message board, and you can't trust a message board at all. You just kind of you go to the message board to kind of see what they're talking about, maybe have a laugh, and then you stick to what you know.
All right. One of the things that I did when I first got started was I went through and I found about 100 of who I at least perceived to be some of the more genuine traders on Twitter, and I built my own list. And so I just had like set up a column on Twitter that I could just follow, and like, okay, these are people that I know. Even if they're getting all hyped up about something, they're probably right.
Yeah, exactly.
So that's definitely that's a big piece of advice that I would give people too, is figure out the people that you feel like you can trust and whose styles match your own, and watch what they do. It's similar to so many different educational services, like yours or many others of don't take the alerts at face value, but take the alerts and understand why they were alerts.
Yeah, exactly. You just gotta find trustworthy people, and that's the hardest thing about a lot of people starting off today in the market. There's a lot of different chat rooms, a lot of different mentors, or just a lot of different gurus. And I mean, I'm not a huge fan of that word at all, guru. Like you're like you're projected down from the trading gods to teach. I don't consider myself a stock trading guru at all. I just run a trading chat room that I believe is very trustworthy. I can help traders out, and that's probably the hardest thing about traders is they don't know where to start. So that's probably the main reason that I started Dekmar Trades. Is just because starting off, I had no idea where to start. I was reading message boards, just hoping I could trust these people. Hopefully, I could trust different gurus. But basically, every guru I went to basically kind of just led me on to buying the next DVD, buying the next type of membership. So it really didn't help me. So I kind of learned on my own as I went, and it took a lot more time than I really wanted. But it kind of developed who I am now. But that's the main thing I wanted to was kind of make a trustworthy community that every alert was going to be for good intentions, and it had profit potential to profit big behind it. Give my reasoning why I'm alerting this, so traders know, and it's not I'm just pulling out random alerts for no reason. I always like to put reasoning behind my stock so they feel more confident as a trader as well.
Sure, and that was one of the things that I was actually curious about and wanted to ask you about, was what it was that drove you to starting that service, because it takes work. It's hard enough work just doing the trading, but now you're adding the educational component on top of it.
Exactly. It's definitely well worth it for sure. I mean, I love waking up every single day and hopping in chat, and I can find a lot of different alerts. I've found huge profitable alerts where traders have made thousands of dollars off it, and that's such a great feeling. But at the same time, we have traders in our chat room that have sent great alerts in that I haven't seen, and I'll make a trade off that, and that's even better. So overall, it's just an overall great trading community, which I'm really proud that I built basically from nothing, and it's also great just how much we've expanded, and the type of traders that are in our chat room right now, which is awesome.
Cool. So what was one of your biggest teaching wins that you're pretty proud of so far?
I mean, I guess everyone would say probably their biggest teaching win would be the most you've ever made someone. The most I ever made someone was $23,000 off a trade. I gave an alert, gave a buy entry, and someone emailed me saying they made $23,000 and sent me the screenshot with it. And that was an awesome feeling for sure. Just really just changing someone's whole account, making someone that much money off a simple alert. But those are always great to see. I've made people, $4,000 a day off alerts. Those are always fun to see. The most I ever made, of course, what we just said was $23,000. But another great one that probably stick with me the most are the ones where traders say, I just made my first trade and profited off it. Those are awesome to see because just how excited they are. And I remember the first time I traded and made a profit. It's such a great feeling. You just really feel accomplished with yourself. All the work that you kind of put in paid off, and you really just want to take your trading to the next level. Is that inspires you, that you see that hey, I made a profit off this, I can do this a lot now, I can hopefully carry this out over time and keep building this account. So probably when I get those I just made a first trade, maybe made $300, it's not the most amount of money, but it's just great to see that someone finally made a great trade, especially when it's off one of my alerts.
Definitely. I love it. So we're kind of coming up on the end of our time here. One of the last questions that I actually wanted to ask was just what do you think separates successful traders from those who give up, fail, or never quite take that leap to make their first trade?
So what separates the traders?
The traders that stick with it and win versus the ones who either just give up or never get started.
Yeah, a lot of it is what we talked about. You have to be confident. The traders that are going to be successful are the ones that are going to take risks. Of course, trading is about risk, and you can't say everything's predictable because it's not. You're going to have to make risk in trading. You're going to have to be a confident trader, and you're going to have to really know how to stay positive even when you do cut losses. Not everyone's going to want to be and put in the work to be a big time trader. Everyone could say, hey, I want to, make $1 million. Oh, I want to do trading full time, but not everyone's going to put in the work to do that. And that's how it is a lot in life. A lot of people say, "Oh, I'm going to make $1 million." Okay, how are you going to do it? And I have no idea. But a lot of you have to understand that there's going to be work to do it. You have to follow through with that work, and you're going to have to make other sacrifices to become a great trader. If that's staying in, if that's turning off the TV and kind of going over what you should be watching for the next day. And it's just making certain sacrifices apart from trading to become a better trader. And when it comes down to trader, you have to be a risk taker, a smart risk taker. You have to know how to be a confident trader, and you have to know that every single trade is a learning lesson and a building block to make you a better trader.
Awesome, cool. So just to kind of wrap things up, what's a good way for viewers to follow up with you? And is there anything else that you'd like to mention?
If you want to join us and chat, it's dekmartrades.com. We give a free 2-week trial to all our traders, and every Tuesday we have free Chat Tuesday, so you can join us in our chat rooms 100% free. We have stock twits, Twitter, Instagram, Facebook, all at Dekmar Trades. And if you want to give us a personal email about any questions at all about joining our chat room, or just help with any trading strategy information at all, definitely just give us an email at dekmartrades@gmail.com. Doesn't matter if you're a subscriber to our membership or if you're not. If you have a question, we're more than willing to help you with anything you need.
Awesome. Cool. Well, hey, thank you so much for taking the time out of your evening to talk with us.
And thank you for having me for sure. It's definitely fun.
Awesome. Cool. Well, thank you so much, and you have a great evening.
Yeah, you too.